Good afternoon, everybody. Welcome back to the Schwab YouTube coaching channel for our final class of today, market and sector analysis. I'm your host, Kevin Horner. It is downright frigid here in Denver, Colorado. I'm sure I'm not alone. Lots of areas of the country getting hit with a bit of a cold snap here today and into the weekend. So everybody stay warm, stay safe out there. Now, today I am joined in chat by my friend and fellow Schwab coach, Rachel Deshelle. Say hey to Rachel in there. She'll get to comments and questions that I'm unable to get to, but nonetheless, I will try to keep an eye on things that are happening there in the chat. I'd like to try and answer some of your requests on the fly if possible. You know, today we're going to basically take a similar approach to what we would normally do in my traditional Trader Talk session, but I am going to expand things out a little bit. We're going to look at some of the more macro layered viewpoints of the market, obviously some weekly charts in that regard. And we're also going to talk a bit more about top-down methodology, perhaps looking into leadership groups from an index approach, subsequently then looking into sectors and perhaps finding some watch lists or building some watch lists, at least illustrating the ways that some traders might go about doing so. So that's kind of what we've got on deck for you here over the course of the next 40 plus minutes. So glad you're all joining us. Now, if you're not already doing so, you may want to be following me and Rachel on X. Rachel's available at Rachel-CS, and I'm found at Kevin Horner CS. We do try to post for you there throughout the week. Rachel and I are pretty active as it relates to posting charts. That's kind of our go-to. If we're not posting about them on X, we're probably talking about it internally here, sharing those charts with each other. So if you're looking for a follow that's going to highlight some basic technical analysis concepts and some charts that might be intriguing to traders, well, Rachel and I would love that follow from all of you. And of course, make sure you're subscribed to the channel here as well. Now, let's get to those disclosures and we'll jump right into things. So first of all, remember that our discussions here are exclusively for your education and your information. We don't make recommendations here, of course. We do discuss technical analysis. We basically will review the markets and utilize concepts and viewpoints from a technical analysis stance that can illustrate the current trend and potential changes or shifts to those trends. Now, that said, we discourage you from utilizing only technical analysis to base your decisions. So simply put, we think you should make decisions based on a multitude of key factors that work for you. But anytime you rely on just one factor, you're going to put yourself at a little bit of risk. So try not to do that. And of course, we work in our Paper Money platform here, Paper Money version of the Thinkorswim desktop application. That means that we aren't going to necessarily be fully accessible. Now, when I say that, there's a bit of a difference in the platform that I use versus the one that's available to all of you for Paper Money. But when we build the scan that I'm going to highlight, I'll try and remind you at that time, that the scan may not help you out in the Paper Money side. You'll probably need to build your scan through the Live Money version, develop and build a watch list, apply that watch list to your Paper Money, just as a reminder, because some of that study criteria is going to be unavailable in scan in Paper Money. So with that, let's just jump right on into things, everybody. Let's see, we've got an hour to go in the day. We're basically flat on the S&P 500, as we can see. We pushed again into that 20-day moving average, and I'm going to zoom in a little bit here, and I'm going to talk about the fact that the last 2 days gave us opportunities to finish above the 20-day moving average. And it didn't happen. At least it has not happened as of yet. We've, of course, got a little less than an hour to go. And yeah, like you said, Jay, we are basically where we finished last week, essentially. Now, that's okay, given what happened on Tuesday, where we opened pretty weakly and finished pretty weakly, of course. And then we basically have spent all week, or the remainder of the week, Wednesday, Thursday, Friday, trying to get back to where we were. So this is a good, astute call out, Jay, because if you'll notice, I can change this chart from your standard daily. Let's go into my hourly, and let's just take a quick look at how the bounce back has occurred and where we seem to perhaps have lost steam. And this is on the hourly. You can see here is basically where we finished last week, right? The Friday close, and then the big gap lower from Friday close into Monday open. And so, in terms of changing the shorter term trend, it could be pointed out that we'd want to get above that gap, right? And we have not managed to do it. Now, this is a little bit more intriguing here because on this hourly chart, we are utilizing a 20-period exponential moving average. That's this line here. And that 20 period can help us understand current intraday or shorter term trends. So looking at essentially a 20-hour moving average, basically looking at somewhere a little more than 3 days, right around 3 days of a moving average in price. So we've been above it here, since midday Wednesday and have held it. So could we be said to be making shorter term higher highs and higher lows? Yes, but because we've got this gap zone presented above us, we clearly have some work to do. This time of the day, it would be probably a bad idea to start suggesting that we can be through that white line to the upside in the final hour of the session. So let's consider that this final hour is more likely to be what we've had for today. A little bit more quiet and a little bit more consolidative in nature as we've tried to figure out whether this bounce back is legit or if the sell we got on Tuesday was more legitimate. So we're going to wait and see, unfortunately. Now, quick look at the weekly here. Let me check my time frame. That's a 10-year. We're going to make it 5. And then we'll just zoom in to more or less about the last 15 months or so. If we're talking about the trend that's been working, it's that green 20-week moving average. So if you're that slower, more deliberate trend trader, perhaps what's going on this week is giving you a little bit of pause. But the fact is, the low of this week hit that 20-week moving average, and it resulted in at least a bounce over the subsequent days. If nothing else, if we are managing our trends, paying attention to the longer run trend, many would suggest that at least dating back to May, and this is going to be the May 12 week, where we've been above the green rising 20-week moving average, we as of yet do not have what a trend trader would consider to be anything different in the recent trend. Okay, so we're looking at a solid 8-month window of an uptrend, maintaining and holding that smoothed out moving average line. Now, that said, if and when we break that green line on a close on a weekly basis, many traders are going to start to lighten up on some of those SPX positions. They're going to be a bit more comfortable looking to take cash out of the market, or maybe remove some of those S&P 500 positions. But as of yet, we haven't seen that. So action right now that has you building cash really is more in line with you putting yourself in a comfortable situation. And that can be fine too. If what you need to do is to pull cash from the market to be more comfortable, we should always make that assessment, right? We should always put ourselves in a much more comfortable scenario. However, trend analysis doesn't give it to us just yet. Okay. Now, of course, that doesn't mean it couldn't change. We all know that. Now, let's move on to quickly check in on the NASDAQ. It's actually been, of the indices, our leader today. So we've managed to bounce back. But boy, if that red line up above doesn't stand out as some resistance, as you can see, we may have an opportunity to finish the day favorably here, right? We could certainly close a bit more elevated above the 20-day in orange, but again, this is a conversation around the speed of getting back into short-term trend, and can we make a new short-term high? Because we've continued to hit our head on this ceiling for a while. And if we look at the NASDAQ 100 on the weekly, there's really, yet again, nothing different, right? In fact, what some of you might see here, I've got that red line drawn in at clear resistance. But if I eliminated that line and we just took in our peak through the peaks we've seen and our bottom, let's go back to the real last time we had a good bottom. I mean, basically, we're in a pennant or consolidative window yet again, right? We are not breaking down just yet. In fact, it was a fairly weak open this week, and yet we quickly recaptured the 20-week moving average. So once more, on your time frames, and maybe not quite a bull flag per se there in VOBJ, but maybe more pennant in nature. Nonetheless, what is a pennant or a flag than more than a digestion period? That's really what it is, right? It's the price movement in the index in this case going to a high price, a big move in this case, if we take a look at the bottoms, and then making that move and then needing digestion. We really have had limited digestion along the way. This is one of our longer windows of digestion for the NASDAQ 100, and it's not really a surprise because of what we've seen on the daily chart. Now, again, if we're paying attention to this from that weekly standpoint, we do not have the sell signal by not having closed below that 20-week moving average. And again, I'm not saying that's the only sell signal, but if you're the trend trader who believed that this could be supportive, you would state it's been supportive every step of the way. And until that changes, trend traders watching the weekly here in the NDX don't have a good reason for reducing position size other than their own internal comfort and emotions. So, here in these talks, we try as best we can to be non-emotional, right? We want to make decisions that are proper based on our comfort and our tolerance for risk. Hopefully, we don't put ourselves head over skis, but we don't know which direction this is going as of yet. You might have a feeling. I'm sure everyone's got an idea, but unfortunately, technical analysis isn't going to give us the crystal ball. Now, looking in on small caps today, the Russell getting finally getting a little bit of a pullback here, right? And I say finally because it's been moving upward pretty well. So let's zoom into what we've seen of late. Slingshot higher off the 50-day moving average here. In fact, if we take a peak, a trough to peak maneuver from the low at the 50-day to the peak we just hit yesterday at 27.35 or so, not bad. About a 10% pop over 3 weeks. That's pretty good, right? We like that. But what we don't like from the trend standpoint is we have what appears to be a bit of a gravestone doji at the top. Now, we'll see if that is in fact a gravestone, but which would signal the end of the run. But today, having traded through and done so with aggression, mind you, traded through the low of our current high day, we had a bit of an extended selling. Now it's probably at this point way too soon to suggest that this selling is more than profit taking at this point. We'll see how these moving averages hold up, right? You're right to suggest, as JB and I saw this morning, we've seen a bit more of a flight to value than we have seen to growth. And things like equal weighted indices have had better moves of late and better returns. So certainly, this could be merely the pullback to an area of support. If we were thinking about that, we might suggest that it just needs to get back to the breakout spot here. In fact, I could color that green. That green line in here is coincident with the 20-day moving average. But I think with this move, we've probably violated the 10-day today. No, we still haven't. Goodness. Okay. So all we've done is get to the 10-day moving average. For some traders, they would wait on a close below the 10, and that's certainly a possibility now. I mean, we are late enough in the day. Yes, there's only 45 minutes that you could suggest it'll hold up, but people, we're only 7 points away from the 10-day, and a move under the 10-day on a close here could be a significant development. And again, from technical analysis 101 stuff, we talk about it all the time. The breakthrough resistance can give you an excellent move. Well, in this case, a really strong one. I think we added about 5% from the breakout. Let's see. Yep, about half of that move, that 10% off the 50-day, about half of it came after the breakout. So we shouldn't be surprised at all to see a revisit of the 2,600 level. That would be perfectly within reason. It doesn't necessarily mean the end of the rally. It certainly would be a potential opportunity, though, if revisiting 2,600, and mind you, revisiting the selling stops, we hold that ledge, and then we start to move off of it. We get the so-called hold move thereafter. Then we might very well be looking at an entry opportunity for traders who've been waiting to join into the small caps here. But That's been a very significant development because that means that earlier in the week, this was exactly the group that I was paying closest attention to and actually running scans in the market on to build out new watch lists, leaning into small caps. Now, that doesn't mean we can't already go about that same process and be prepared. So if, as an example only, your thesis was, I'm going to get into small caps because I believe that the rate environment is only apt to improve, or this is going because we are expecting rate cuts later this year. Small caps have been rallying. We've got opportunity here. Whatever your narrative or your thesis might be, the time to start building it is before the moves occur. So the fact that we're pulling back right now, if you are a believer in the Russell in the year 26, for example, well, then this may very well be your window of time to start building those lists so that you've got your reference points and you can start building out your trades thereafter. So try not to get caught up in only looking at the groups that are giving you the pops to the upside when they pop to the upside. Opportunity presents to us when we are prepared. And part of that preparation is doing the legwork in advance. I see we've got a survey in there. Thank you for reposting that one for us, Rachel. If y'all would be kind enough, you all know this is Mike's class here on Friday afternoons, but your feedback is always appreciated, and I would love to hear from you. So if you click that link, you can get to it late in the day if you'd like. No problem to that extent. After the class is fine. There's only 2 questions. And if you want to make comments, you're welcome to. Any of those comments you leave, they all come directly to us coaches. And if you take the minute to make a comment, I'm going to take a minute to read it. So would appreciate hearing from all of you. All right, so let's see where else we've bled a little this afternoon. We've noted our semiconductors made a new high there yesterday, and we are getting that pullback here as well. Very, once more, a little bit limited in scope, but we do have a bit of a divergence here, noting that the RSI did not get to overbought conditions, did not get to the high we made back here when we peaked the last time. And that divergent high did lead to a matching low back here last time. Not to suggest that that has to happen, but we know that it's a possibility. Now, the 20-day moving average certainly seems feasible as an area for support since it's been steadily rising here with us, but not by any means a terrible pullback if we were to find the 20-day moving average there in the semis. Now on the weekly here, it's going to look pretty much the same as everything else. It's going to be really hard to find weekly charts that don't look that great, but I will say that if I duplicate this line, I think that last test or that last horizontal support does kind of make sense for us here. Right around 70, let's call it 7,400 just for ease. That looks like a pretty interesting spot, right? 6,200 up to about 73, 74. That was a great move, good range, and allowing that 20-week to get caught up. But that 20-week has been kind of lagging pretty slowly here because the SOX just keeps pushing. So, if you're looking for confirmation or confluence, I should say, excuse me, confluence with your 20-week, we're probably going to need a little bit more, a few more weeks to catch up to that level there around 7,350 to 7,400, which surely keeps us kind of keeping an eye on things. Now, the next one up here is your transports, which are kind of back and filling, trying to figure out what's going on. You all know that we've been watching here the Dow Theory. I do have my Dow Theory charts up. The weekly here is at a new high, but not held. In fact, that candle right now today for this week is pretty wide range. And you know what? There's a good chance that we finish with back-to-back kind of spinning tops up here, trying to figure out our next direction. And the way that this looks on my Dow Theory chart is a little interesting as well, because even though we made a new high here in the industrials in the last 2 weeks, now we've made a new high intra-period in the transports this week. They're not candles that would inspire confidence. What are we looking for? We want that big, beautiful green candle all the way filled in. That kind of tells us that the momentum is there. Now, we've seen these both move to the upside, which does give the belief or maybe the confirmation for some traders that the market is healthy in our transportation side of things, our industrial side of things, both validating each other. We can also say the same thing about our S&P 500 and the semiconductors, of course, which I have decided to coin the Neo Dow theory. Just kind of comparing the S&P with the SOX, because the SOX is far more likely the leader in our current market environment than, say, the transports, being that we are much more consumer driven as an economy now. And where do we focus on production? It's in the semiconductor side of the markets. All right, let's see here. How about, let's go ahead and take a look. Now, earlier this week, Rachel and I talked about her favorite chart, that being our the relative strength performance look at how things are moving around so that we can see some leadership. Of course, this is just a visual reflection of what you can get in the Market Watch tab. The Market Watch tab, you know that I'll list for us there the sectors, and then we can look at all of those. But from the visual standpoint, we've got energy breaking to highs, same with materials, also industrials at that upper level. Where are our laggers? Well, got to call it out here. Technology clearly lagging the S&P, real estate struggling a bit, and utilities struggling a little bit. Now, the latter two, utilities and real estate, likely struggling with the most recent shift we've seen in the 10-year yield, as an example. I'll show you that grid there, or rather that yield chart momentarily. And of course, we can share this with you. So I'll happily share this grid. I think this is a worthwhile educational viewpoint, of course. So please keep in mind that whether it's a grid or a scan or any of these details we do share, they are for your educational purposes. They are not a recommendation for your use. They also are not guaranteed for timing or accuracy. So we'll have this. And if you're watching this one in the archives, everyone, know that this is also going to be in your show notes. There we go. So keep that, maybe that one in your grids as an availability. The other thing that stands out here, so like I said, real estate, utilities, a little bit lower here, or having worked lower in terms of performance versus the S&P, as yields have held up and this week popped higher. So that's putting pressure on those interest rate sensitive groups. Keep that in mind. And we've also noted staples having shown us a little bit of a flight to value, maybe a little bit more of an interest in the market to simply go with something that's going to be a little bit less volatile and might be ready to start producing, and that being staples or perhaps even healthcare. And we've talked a bit about this, where we've seen this leadership. So let's take a look at it from the actual raw data, everyone. Let's jump into my Market Watch page. Let's go to quotes, and then let's just bring up our sectors here. So sector indices, and I've added in our recent adjustments to incorporate not just today's change, but our year-to-date change. So our leadership there should not be surprised that it's energy, right? And then also we've got a 5-day change, a 20-day change, 6-month, etc. And then you've got your relative strength columns over here. But we did talk about this stuff earlier in the week. When you make these, or if you're wanting to add these in, everyone, that gear will allow you to do it. Percent change since, and then notice the little caret here in the lower portion. You click that and you can alter your time frame. So we've got 5 selections for you in terms of time frame since this, so you can take a peek and get return details. And you don't have to do this, of course, only on the sectors. That's what I've selected here, but you also have those sectors and industry groups if you'd like to look at it that way. So what I did when I did this earlier, a couple of the things that jumped out at me, well, obviously leadership here in semiconductor material specifically, on a this is the year-to-date basis. So we've seen materials and equipment right at the top, but should not be surprised that it's anything relative to precious metals, oil and gas, and energy, and then a little bit of agriculture. But you can see some metals and mining, commodities, etc., and then maybe a little bit in the way of overall. There was a construction one in there as well. So let's look at a few of these, though. Let's talk about a few of these various groups. I'm going to kick this back to the sector review. Okay. Now, amongst those individual sectors, here's your energy. All right. We talked about this morning, wanting to see if we could make a new high. Well, we are, in fact, looking to close at a new high. And again, this is the weekly viewpoint, by the way. So this is a dabble with a breakout, right? And we've very recently kind of measured the range that we've been in. But ultimately, again, we've been in this range for quite a long time, haven't we? I mean, the big move, of course, goes back to a few years ago here. I think we've got this at a 5. Let's make it a 10. So when we bottomed out in energy and COVID, we had an incredible rise to the upside here. The initial move took us into this vicinity. It was about 300%. And we basically, even though we've been through that level, we really haven't been, right? I mean, I can put another line in there and say that this was just as important a level for energy to get through. And yeah, we're above it, but our limited time above it stands out to me. So this is intriguing, of course. So with that in mind, let's take a move off of energy, noting our move through major resistance here. We talked about materials continuing that upswing, right? Look at that, riding that 20-day moving average. What about our staples? Staples up 0.2%. Breaking a bit of a bull flag. I drew that in as a flag and a stiff wind here. Seems to be pushing into our 52-week range, so worth monitoring there, right? So staples still looking strong, and I think it's notable here the move it's made this last 2.5, 3 weeks. This is substantial. I mean, we're talking about a significant pop, and then the volume that's been there with that move also stands out to me as well. Right? Big moves, big volume stepping in. So maybe some so-called smart money adding to staples, leading to this significant move to the upside here most recently. Okay, let's see what else we got. So let's talk about the couple of things that have been rough for us of late. I'm going to bring up discretionary, which is actually holding on and looks far better. We haven't talked about discretionary lately because evaluating the trend of discretionary has been difficult. Yes, we are more or less holding support at this level here in white, but you can see that if I drill in, it's just trying to get a feel for what discretionary wants to do is been a little bit tricky, right? So yeah, we're back above off the 50, back above the 20. See if we can pop this back to new highs. Healthcare, JB and I talked about today, but more specific to healthcare was the internals in healthcare, noting the movement upward in pharmaceutical and in biotech specifically. In fact, let's take a quick look at. Let's see here, biotech, I believe is BTC. There it is. So here, if we were evaluating healthcare, biotech broadly here, this is one way to consider it. You know, you've got a fairly clear uptrend, and if nothing else, fairly clear horizontal support. We did make a new high here a couple of weeks ago, ultimately maintaining the level and allowing these moving averages to run. I think it's called out here, the purple 50-day moving average seems to be the most consistent in terms of this trend dating back to May. So once more, you're looking at a solid 8-month window here or so where this is a group that's been, outperforming broadly. And then we also talked, as I mentioned, pharma. So let's quickly check in on pharmaceuticals. That would be PBT, and pharma doing its thing as well. Very much in line with what you're getting out of biotechnology. 50-day moving average catching up with things in here also. Okay, how about those precious metals. We had seen a pretty impressive finish to the week here. So let's go in. Let's bring in gold. If my, oh, maybe it didn't get it in there. Here, let's try one more time. Okay, doesn't want to give it to me. There we go. There's gold. All right. Now, there's a chart that many of you continue to ask about. What are we going to say about any investment that just keeps continuing to rise here? Yeah, the 50-day moving average, if you're using that to manage support, you've got a lot of comfort because we are well extended beyond the 50-day moving average. That is an area for horizontal support. However, we are going to have opportunities before then to take profits if you're a trader who's looking to take profits on weakness. So 50-day, interesting spot. That said, 20-day, just as good for some. But again, we got to give up quite a bit of a move, right? So, I mean, it is brutal to take what is now pushing into close to 5,000 an ounce and suddenly find us down 400 points, which is where we would find support along the 20-day, which we've been above really back to mid-November. So again, this is absolutely a momentum-based trade, David. You're absolutely correct. But if you're the trader managing that, my goodness, you got to get yourself way higher into a level where you're not giving up nearly as much in the way of profits. And I say that if you're a trader who is a seller on weakness. Not everybody likes to sell on weakness. Some traders want to be selling into strength. They might be using a candle move like we've seen this week. 4 consecutive days of nice green candles like that may very well be the scenario where a trader says, this has been a good run. I'm not trying to pick the top, but I managed to profit a lot of this move. I'm just going to sell a little bit, pat myself on the back, remind myself that trading is about selling when prices are up and buying when prices are down. If that is an approach that you believe in, follow your plan. If you're the trader who conversely says, I'd much rather sell when I've been given some evidence of weakness, then do that. But that weakness, you have to acknowledge what that means. And as James says, yeah, it's difficult to watch those moves that go down to test support, the legitimate longer range support. But if you don't do the math on it, you'll never know if you can handle it, right? So I'll zoom in here a little bit. And I did want to remind you, by the way, as it relates here, yes, we're looking at a futures contract. We are not talking about trading the futures contract per se. And of course, futures options, these are not for all of us. And so what we're just evaluating is really the trend here. And I'm talking about it from a standpoint of trade management now, okay? So what I'm referring to as the 10-day moving average to provide support, well, from where we are right now at 49.80, if we were to drop to the 10-day and not violate the 10-day, well, then we would hold at the 10-day, right? We would still be in the position, but we'd have to give up 5% to be told, hey, you held it until it bounced. Great. But what if it fell 5% and then it fell the next 1 or 2%, took out the 10-day? Are you then a seller? In which case you might be down 6 or 7% from where we are right now. Okay, so you have to acknowledge you can manage the trend. Don't lie to yourself. Don't listen to that voice that says, I'm good. I can manage the trend. I'm comfortable staying with this until it violates X moving average. No trouble at all, only to find out that you just lied to yourself and you can't. So learn from those things, ask yourself the hard questions, and then answer them as best you can. I can't state that in a loud enough fashion. You can lie to yourself all you want, but it's not likely to help you be a better investor or trader. All right. So just be honest with yourself, know what you can sustain and know what you can't. And hopefully that helps you to build those plans. Okay. You're going to see something very similar in silver. Wow. Guys, this is the 10-day still. How long have we been above the 10-day here? all the way back to November 25. You have not had a close under the 10. You had one close. So this December 31st close was 70.98 and the 10-day moving average 71.01. Missed it by 3 cents, but it held. All right. And each of those other tests have held. Same story. Manage your trade. Don't lie to yourself. Have a plan. Stick to it. Okay. So there's your precious metals. Now, what about some of the stuff that we need to be paying closer attention to? How about copper? So copper also moving in a bit of a overall bullish pattern. 10-day moving average has been violated a number of instances in here. Most recently here, the last week. Today, we're getting back above it. Let's see how our standard 20, 50, and 200s look. Well, that 220 suddenly looks a bit supportive. Maybe not as supportive as we want it to be. There's been a little bit volatility, but if we were looking at this from simply a trend standpoint, and we were talking about this as an equity, one thing you will see here is a successful test of support. And some traders would suggest that we've got a hold with today's close if we do, in fact, finish like we look right now. Yesterday being the low day in the pullback, and today being a close above the high of yesterday, that low day in the pullback. So copper holding on relatively well as also I should say. Let's see. What about one other one for your review here, just in the standpoint of again reminding us that there are more details to pay attention to. We're always going to want to check in on oil. Oil, it has been correcting that short-term downtrend from the peak in the late summer. And I say correcting because we've been above the downtrend line now this month, basically the last 3 weeks. And you'll notice that as we've been above that downtrend line, we've not given anything back, everyone. We've managed to basically hold the 50-day moving average, hold horizontal support, allow that 20-day to cross the 50 to the upside. We have a bullish bias to the price of oil. And if we can manage to get through 62, we will then have taken out the 200-day moving average there. That could be a significant development as it relates to oil. Now, this week, and in anticipation of this cold front, we have seen nat gas moving fairly speedily to the upside, correcting what was a healthy sell-off very rapidly here, pushed us right back essentially to a new high, but really the same level we were in early December here. So this has been a very interesting move, but this is one of those scenarios that commonly, and I obviously don't know how this is going to play out. We don't know what kind of fallout we could have from what promises to be a very difficult storm weekend for us. But if the fallout is rough, then we could see some continuation of this recent move. But it wouldn't be a shock at all to see this be more of a buy rumor, sell the news type situation in development over the coming week here. But, as always, have a plan, try to stick to it. Now, the other thing we're going to hit on here briefly is going to be crypto real quick. I do want to talk about what is going on here with Bitcoin and with Ethereum. So real briefly, we'll take a peek at Bitcoin, which is more or less still in the range. But I got to say, this throwback below the moving averages really happened quickly. And, some of you have been probably trying to play proxies in Bitcoin utilizing equities. And, if you're utilizing the equities that have relationships to Bitcoin, they're probably not doing a whole lot either. I mean, it's been a real struggle. Though two that come to mind when watching Bitcoin, Ethereum, etc., are obviously Coin and Strategy. So, I mean, Coin, we can say this is a clear downtrend. That is a new short-term low, not a 52-week low, of course, but we are below the 20, the 50, the 200-day moving averages. And then Strategy, on the other hand, there you go, remaining below the 50, the 20, and at the 20, but remaining below the 50, well below the 200. Been a rough go here for Strategy as well. Under 150, though, things get decidedly can actually get more negative, if you can believe it. Remember, trend is your friend until it changes. Well, this trend, we came into this consolidation, admittedly, we came into it bearishly. So ultimately, we need to force the stock to make the shift, right? To actually change price action, to validate being in it. We don't have a change to that just yet. Consolidations, typically, you look at a consolidation in terms of what was the trend when we came into it. So having come into it in a downtrend, if it consolidates, the general consensus is opportunity for more downtrend. Force the stock to do something different. Tried to do it right here, got up through the 50-day for the first time in months, and it couldn't even hold it for half a day. And it was right back beneath it. So monitor, make sure you're watching those criteria. Now, I promised on the jump this morning or this afternoon, excuse me, that I was going to help you out with a scan. And this is something that I've been doing just to develop new watch lists. And so that scan is something that I call simply uptrending in all time frames. And obviously, it's not really uptrending in all time frames. It's uptrending in 3 time frames, that being the 20-day, the 50-day, and the 200-day. And all I'm looking for is a list of stocks that are above all 3 of those moving averages and have enough volume, 500,000 shares on average for the last 50 trading days, which would give a trader most of the time enough comfort that they can establish a position and unload or sell that position at their discretion without much trouble. Ultimately, liquidity is always a factor. So that's all that this one does. And all I've asked here is to scan in the S&P 500 and then intersect it with one of our leadership groups. So with this in mind, we could actually, knowing what we talked about earlier, that we've got the Russell 2000 in what we hope to be a brief pullback mode, as opposed to an end of an uptrend, we might start to look within the Russell 2000 and specifically intersecting with, let's go ahead and choose energy, since we talked a bunch about energy this week and its move. So scanning in the Russell 2000, intersecting it with energy specifically, go ahead and hit that scan. Not a bad list, 41 companies. So what I'm going to do is save that query. Gives me a pop-up box, and I'm just going to call it, let's do uptrending, all time frames, energy. And then, of course, my favorite trick as it relates to the Thinkorswim desktop is to then just create that as a watch list. So next step here, I'm going to change my indices here to a personal list that I just created, uptrending, all time frames, energy. There it is. And remember that pink, when I looked at that, by the way, that pink, and the pink target on it, this right here, that's what lets me know I've got a dynamic watch list. So basically all I've done is take a scan that I created and from the scan page made it a watch list. And that's what this is going to do for me. And now I've got what were 41. I'm going to link this up. I'm also going to change my symbol list, or rather my column list here, so that I can make sure I've got that. So if you're not familiar with this, everyone, make sure you get into your gear icon so that you customize your columns. And then once customized, give it a name so that you can easily reference it, right? You'll save as, give it a name, and then it becomes available in your dropdown. So what I did was I titled mine watch list columns, because my watch list columns are a little bit different. So there it is, watch list columns. And then I've got those listed here. So there's my mark change, my percent change, and then my standard net change. And of course, they're all sortable. Now, many of you wonder, why would I use the mark change at all? The main reason I use mark change is I can see what price action is doing pre-market and post-market. Remember, percent change is only validating action from the last session to the current session. Mark is talking about the last change, whether pre-market or extended market. Okay, so keep that in mind as well. But this is a quick and easy example of utilizing a scan tool, conceiving of top-down methodology, and then just giving yourself the list to work through. And I tend to use the keys from here. I just use the arrow button and just slide on down my list. Look at this. I'm already finding stocks. I'm sorting by mark change. I'm finding stocks that are either in the process of breaking out or are absolutely, at least, if nothing else, trading above all three of those major indices. Those major moving averages, excuse me. To answer your question there, Jim, that pink indicator specifically is the definition is a dynamic scan. So when you look at anything personal, all right, these are just taking from my historical scan tool, the scans that I have saved. So when you see that pink target, what that means is this list can change for me throughout the day. It started right now with 41 stocks, but as stocks fall off, so if one of these stocks is no longer above the 20-day moving average, it's going to fall off the list. If suddenly one stock that was below the moving average, one of those moving averages is now above all three, boom, it's added to the list. And you can also tell the system to alert you when the results change. Now, if you're doing that, you might find yourself getting a lot of alerts in the middle of your sessions, but in the middle of your segments and your time frames watching the market. But nonetheless, it's a really nice gift. So, okay, with all of that, everyone, I know we covered quite a bit, but I think we've run the gamut today. Boy, we started the morning with Trader Talk. We're going to end the day with market and sector analysis. I hope this was helpful for all of you. Remember, we offer you these classes every day of the week. So when the market's open, you're going to find us here on the channel for all of you. So big thanks to Rachel Dash there in the chat. Remember to follow us on X. Rachel and I would greatly appreciate that. Rachel Dash CS and Kevin Horner CS. And if you liked this review, hit that thumbs up button for me. Again, we had a survey opportunity in the chat. If you click on that link and offer your feedback. Remember, you can watch archived sessions of this class as well. Mike and I would really appreciate your comments and any feedback you have for us. That's always helpful as we continue to offer the class and continue to see this one weekly. So with that, I'll let you all get away and stay safe. Stay warm this weekend. Have a nice one. We'll reconvene on Monday for Trader Talk in today's market. That'll be at market open following what promises to be a cold but great weekend. Have a wonderful one, everybody. I look forward to catching up with you again real soon.